Thank you, Nimrod. What an extraordinary year it has been for all of us. In the next 10 minutes, we are going to discuss the exponential rise of online, well, everything, as a direct consequence of a global spreading pandemic, and the surprising flaming trend of 2020, or rather the second half of it, IPOs and SPACs. I'm more than delighted to have this talk with Shlomi Chagai, Global Group CFO of Content Square, that successfully completed a $190 million Series D round in March with giant tech VCs like BlackRock Private Equity. Shlomi has been an active CEO and CFO in different tech companies over the last 20 years and has led various M&A and IPO processes, including ClickTail Content Square merger in June 2019. I'm sure he will share with us crucial insights today. Hi, Shlomi, and thank you for taking the time. Crazy year, huh?
Yes, crazy year, but it's just more than a year. It's basically the last 2 years. It all started with the turnaround when I was leading ClickTail, the first investment of KKR in Israel. It was something like a year in which we made this company fundable and worked on the turnaround of the company. And this is something that basically led us to the mid of 2019 when we finalized the acquisition of ClickTail by Content Square. It was an acquisition and a merger of two businesses with lots of common, with lots of things that we managed together. Since then, we worked on the integration of two companies. One of them is Israeli, which is very global, and the other one is a French company, which is very global. And after 12 months of this integration, we started a fundraising that we basically started in the beginning of 2020. And it's something...
Sensitive timing.
Yeah, lots of sensitive timing. And I think it was something like close to 2 months before we felt like COVID is coming. Everything was finalized by April 2020 when we managed to raise $190 million fresh money from BlackRock. And since then, we are working towards the next, I would say, activities of the company that might lead the company to an IPO.
We'll get to it later. Content Square is a leading experience analytic platform that analyzes digital behavior in order to provide the world's most powerful brands insight. What's your perspective on the effect of COVID-19 on online businesses?
Definitely, the effect is very positive. The online business or the digital business of the online is increasing very rapidly over the COVID period. We see lots of transaction coming from most of our enterprise website that we are working on. We see lots of sector, all this sector is just booming, and we see lots of sectors that are increasing and are monetizing the website very successfully. Of course, some of the sectors like travels and exhibition and tourism are still under hold, but definitely everything is very positive. We also see an increase which is correlated to the transaction in the hosting and in the cloud and all the expenses around. Mm-hmm. And we also see some campaigns. Every year we see the campaigns toward the Black Friday, toward the Cyber Monday. This year, we see lots of preparation because of the increase, because of the very positive atmosphere around. So we see all of our enterprises, customers, preparing themselves for the next campaign towards these events. And I think that, all over, we see that, the next years to come, more and more SMBs are getting there. And more,
small businesses.
Small businesses. I can give you one example of the winery next to my house. It has something like 3 stores. I used to buy my wine over there, of course, inline in the stores. And there is a shift in which all these SMBs started generating the online stores in which they deliver directly to the customers the goods.
The physical stores are closed, so everything is moving online.
Yes, definitely.
So I'm going to come back to the hint you threw. So what's the next step for Content Square? IPO? Are you looking at IPO? This is like the big buzzword.
So in the company size right now, and after the last years of growth, we are going there. I believe that although we started IPO readiness process in the company and the investor really believe in it, but for Content Square, IPO is not a goal. It's just a mean in order to achieve its targets.
And if we hold on just a moment on your last comment, from your perspective and your experience, you have vast experience in the high-tech industry, what are the business metrics or the financial insights that highlights that make an IPO successful? What would you put the main focus? Because there are a lot of tech companies today that are looking on the possibility of an IPO. What's your take on that?
So since there were many IPOs recently, and there is lots of statistics around IPO, so today I can include it, or I can summarize it in two aspects. One of them is the SaaS KPIs, in which a company should monitor in order to make sure that the company is ready for an IPO. And we can talk about ARR, we can talk about the net retention, CAC, Rule 40, CAC. Cost of acquisition, Rule 40, magic number, and many things that most of the financial CFOs are there and they need to monitor it.
But this is for the SaaS industry. In general, not all tech companies are SaaS. So.
Yes, so generally, not for SaaS, I think that companies should make sure that the revenue is growing in the right rate for 1 year to another. The EBITDA definitely is something. And today, a company should be on top of its financial highlights in order to make sure that once it's pushed the button and go for the NASDAQ or for any other stock exchange, the company is ready from all of the financial aspects.
Okay, I think we all walked into 2020 with the expectation that it's going to be a robust IPO year. And then, the ultimate black swan arrived, COVID-19, and I think we all adjusted our forecasts. Then some large IPO came out, like Lemonade and JFrog, and suddenly the market started to open up, and today we see a floodgates of IPO, and like everyone is talking about it. What's your take on this? What's driving this like mega trend?
I think that, we see this in the last few years, and by the way, this is something that the industry is very, interested in. Although COVID is around, we see that all of the stock exchange are increasing, and there are lots. There is a huge boom over there. From the investor point of view, there is lots of money. They have money and they are going to invest. The interest is very low. They are moving to equity. They prefer to get into equity. I would say that less real estate, but more on equity. And I think that the big winner of all of this is the tech market, the tech sector. From the technical point of view, from the company side, from the tech companies, so one of the things is that, it's easier to get there because there are more and more interest around IPOs. I can see this around the bankers that I'm speaking to. Second thing, the valuation are very, very, very high. You can see the JFrog one, you can see the other one. I think that most of the IPO were very successful. And so companies believe in it, companies want to get there. And I think that, the situation right now, while both sides are very much focused on it, this is the big advantage.
But we mentioned JFrog and Lemonade. These are relatively more mature companies. But today, I think we see more and more earlier stage companies, even sometimes pre-revenue companies that are going to IPO. Does it make sense? If assuming the market allows it, so to speak.
So if I compare these days to about 20 years ago, when there were small companies going there, and the requirements were much lower. Today, the requirements are still higher. You need to have the financial ratio that I mentioned before in order to get there. But still, if small companies really consider going there, and I'm not against this, they need to consider the following. First of all, there are lots of costs which are related for doing the IPO, also for maintaining a public company. And the second thing, there is lots of distraction among the management, among the board, among all of the structure where the company is right now in order to be ready for this. So I think that in the end of the day, there is an opportunity, but a smaller company that wants to go there needs to consider all the aspects that are around.
It's a shift basically from a certain state of mind of a very lean, agile company to something much heavier and more regulated, corporate governance, etc. It's a mind shift. Sometimes when I speak to companies, I have the feeling that they think that the IPO, it's a one-off event and then they just can come back to their old way of doing business. But it's a big shift, right?
Yeah, it's a big shift, and companies that go there, the main thing is not only to do the IPO. The main thing is to be traded later. right? The liquidity of the company and to make sure that the valuation of the company. So company needs to be ready to make this big shift. And once they are ready, they need to go there and to go there the faster they can.
What we hear today from the other side, from the investor side, the institutional investors, is that it enables them to invest, that they are looking for higher yield returns, and this enables them to basically participate at the game at an earlier stage, not just arrive at a very late and mature, and basically optimize and maximize their value and basically bet or gamble on the technology sector, which, as you mentioned, is clearly the big winner of this COVID-19.
Yeah, indeed. And this is something that, in the end of the day, it's not only regular IPO, but also SPAC. It's not only the traditional IPO. Today we hear more and more about SPAC and about this vehicle. What is your opinion about this, Dina?
Over the last few months, I think it's accelerating very, very quickly. I think that SPAC is basically an instrument. It's another way. It's the back door to being traded, whether it's on the New York Stock Exchange or the Nasdaq. We see stronger sponsors that are basically forming a SPAC, which is a special purpose acquisition company. They form the SPAC. They go and raise money from the public without any operating business. With the commitment, the commitment to the investors is to find a good investment within the next 24 months, within the next 2 years, and it enables institutionals and let's say investors that are not VC investors with specific expertise in the tech market to basically put their money on the strong sponsor. Bill Ackman, the hedge fund wizard, lately managed to raise $4 billion to a SPAC in order to find like an interesting unicorn that still has some room to grow. So the SPAC enables the institutional and the investors to basically enter the game at an earlier stage. And on the other hand, it enables the tech companies an easier way into the market. They don't have to work on a prospectus. They don't have to prepare a business model, explain their business model. It's relevant especially to biotech companies and some companies in the autonomous car industry. So this is a very innovative way, and today basically companies have 3 ways of becoming public. Classic IPO, still the traditional. Second is the SPAC, and thirdly, for a company that doesn't look to raise money, they can just be list themselves without the prospectus. So we have 3 ways. So really a hectic year. Shlomi, what's your forecast for 2021?
So, forecasting next year, I think it will be very hard to.
Nobody would do it right in his right mind.
Yes, but, things looks very good. And the environment, the ecosystem looks very good. I wouldn't forecast anything, but I would say that we need to keep with the same momentum in order to achieve the goals for next year.
Careful optimism. I wish us both a more traditional, ordinary, and calm year for the year to come, for 2021. Thank you, Shlomi. It was a pleasure, as always.
Thank you, Dina.
And now back to you, Nimrod.